Okay, let's talk Chubb. They just dropped a third quarter earnings report that wasn't just good, it was a knockout. We're talking record earnings that absolutely blew past what analysts were expecting. So today, we're going to dig into the numbers, decode what management is saying about the future, and we'll wrap it all up with our official call on the stock.
All right, so here's our game plan. First, we'll hit the main headline, this record-breaking quarter. Then we're going to dive deep into the numbers that led to that huge 26% earnings beat. After that, we'll look at management strategy, check out how the market reacted, and then finish up with our final rating on Chubb. Let's get right to it.
So first things first, let's set the stage here. This wasn't just another solid quarter for Chubb. It was, in their own words, a truly historic one.
Yeah, CEO Evan Greenberg basically came out swinging. Right at the top of the call, he framed the results as a record, and he said it was all thanks to the company's broad and diversified business. That sets an incredibly confident tone from the very beginning.
But hey, a record quarter is just talk until you see the numbers to back it up. So, just how big was this beat? Well, let's take a look.
The big one, the headline number that just jumped off the page, was core operating earnings per share. It came in at a massive $7.49.
And to put that into perspective for you, this wasn't just a small beat. It was a complete blowout. That $7.49 per share is more than 26% higher than what Wall Street was predicting. That just shows you how much they crushed it.
And it wasn't just earnings. Revenue came in hot too, hitting over $16 billion. That also beat what the analysts were looking for, so you've got strength on the top line as well.
So this table, this really just lays it all out. A huge 26% beat on earnings per share and a nice, solid beat on revenue. This is the exact kind of clean, decisive quarter that investors absolutely love to see.
So, what was the engine behind this incredible profitability? Well, a huge part of the story comes down to one really important number, the property and casualty combined ratio. It came in at a record low 81.8%.
Now, for anyone who doesn't live and breathe insurance metrics, the combined ratio is pretty much the most important number for an insurer's core business. Anything under 100% means you're making a profit on your policies before you even count your investment income. So a ratio of 81.8%, that is exceptionally strong. It's a huge signal of outstanding underwriting discipline.
Okay, so let's shift gears and see how management is thinking about all this. They didn't really talk about it like a one-time thing, but more like the output from a really well-oiled machine that has three key parts.
Greenberg broke it down with this simple but really powerful idea. The company's earning power comes from three things working together. It's top-tier underwriting, which we just saw in that combined ratio, then growing income from its massive investment portfolio, and finally, a really disciplined approach to growing the business around the world.
And this slide really gets into the details of what that disciplined growth actually means. Management was super clear. The market isn't the same everywhere. While the big account property insurance space is getting more competitive, Chubb is navigating that by staying disciplined on the casualty side, where prices are still firm, and by leaning into its strong middle market business.
Okay, so we've got a record quarter and a really clear strategy. But how did Wall Street react? And maybe more importantly, what signals did management give about what's coming next? Let's check it out.
Now, you've got to see the context here. This is really important. Coming into this earnings report, Chubb's stock had actually been underperforming its peers over the last year. So that really set up an interesting question. Could a huge report like this finally change the story?
The immediate reaction was, well, it was positive, but maybe not the explosion you'd expect after a 26% earnings beat. The stock closed up about 2.7% on the day of the call, so a solid thumbs up from the market, but maybe investors were already expecting something pretty good.
But honestly, the most powerful signal came from the forward guidance. Management came out and reiterated their goal for double-digit earnings growth. They actually raised their key profitability target, return on equity, to 14% or even higher, and they committed to keeping up with aggressive share buybacks. You put all that together, and that is an extremely confident outlook. So all of this brings us to our final analysis. Based on these really powerful results and that confident guidance, what is our call on Chubb going forward? Okay, so how do we put all the pieces together? You've got a massive beat, a super confident outlook for the future, and a stock that had been lagging its peers. So what's the call for the next quarter? All right, here it is. Our call is an outperform rating. The story here is just too compelling.
Management has laid out a super clear path to double-digit growth. They've raised their own bar for profitability, and they're aggressively returning cash right back to shareholders. And given that the stock was underperforming before this, we think this powerful combo of great execution and strong guidance is going to drive it to outperform its peers in the quarters ahead.
And that's our breakdown of Chubb's very impressive quarter. Just remember, this analysis is for informational purposes only. It is not financial advice.